Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to be analyzing a company that I've invested in by the name of Adeia. This is a small company that provides the code, the software that powers devices that cable companies use to provide the content that we watch online or over a cable box or on a device like a phone. Really interesting little company that I've been an investor in. I'd like to tell you about it in this video. So I like to scorecard my investments, and I want to get the answers to 4 questions and then make a decision on a stock. First, is it an industry I want to be in? Is the company operated and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. Those 4 questions, or I should say answering those 4 questions, lead me to the question, would I buy this stock today? A quick history on Adeia. They've been, through their predecessor company, Xperi, they've been in the business of providing either television viewership, additional data capabilities on your viewing of television, or now streaming. So they've really been in this space for a long time. Have a lot of domain expertise, have a lot of patents in this area that they will sell to companies that create devices or that stream. Their customers include the classic cable companies like Charter, Comcast, Cox, and as well as the new generation of cable companies like YouTube TV. The customers also include the streaming companies like Paramount, Peacock, Pluto, and YouTube. They also have customers that manufacture the devices that you can stream on, like LG, Panasonic, Roku, Samsung. So when you buy a Samsung TV, it might have the code that Adeia produces and licenses to Samsung. Samsung will pay Adeia a royalty for using that technology. And last, they also sell their code to semiconductor manufacturers who will embed that source code into their little device or their chips, which end up in devices that you can watch media on. Adeia stock has been returning really well. It's up 128% in the last 12 months. And principally because they divested from their predecessor company, Xperi. Xperi was made up of 2 sides. The side that Adeia has, which is they create code, source code that enables, the viewing of media. And then they had a side to the business that was more product based. So they would sell like automotive products and other types of tangible products. And that side of the house was less valuable. So when they divested the company, really created an opportunity for this standalone company to have a different valuation, and the valuation just skyrocketed in at the end of September. Over 5 years, the stock's returned 68%. So really nice rise in 2022. Overall, a really good stock. I value my companies based on free cash flows. And in the case of Adeia, they produce really good free cash flows, which is great to have a software intellectual property based company that produces great free cash flow. Their annualized free cash flow run rate is 173 million, which is my starting point for my model. Weighted average cost of capital that I got for Adeia on Finbox is 11%. The growth rate I'm going to use for the next 3 years is about 3%. I mean, people are updating their TVs, they're getting new Rokus, they just want to get on the streaming bandwagon, I guess. So 3%. It's a very conservative growth rate, but I'm going to go with 3%. And then perpetual growth rate, and again, very conservative 1% there. And based on those factors in my model, I get a valuation of $1,689,000,000, but their market cap is only $1,110,000,000. So there is an opportunity for a 52% discount on this stock. Their balance sheet's in shape. Short and long-term debt is only $752 million, but their EBITDA is 255. So they're less than 3x debt to EBITDA, which is a very good ratio and shows that they can pay off all their debts in 3 years using EBITDA. So really strong little company that has a discount. So performance of this company, they're a pioneer and a leader in this space. Even really respected companies like YouTube and Samsung, Roku are using their code. So it really says a lot about how good their code is. And they've been in the space for a long time, so they have a lot of expertise. Their customers, as mentioned, they are the media companies that consumers are buying into. But behind that, each time a consumer buys something, that company pays Adeia a royalty, which is great. They're going to have steady growth year to date in 2022. They have a 6% growth rate. They have high cash flow, a yield of 16%, which is excellent. The balance sheet is in really good shape, and they pay a dividend of almost 2%, which is nice. For 2023, so the company, again, they're going to be steady, and they reiterated their guidance for 2022. It's good to see, but I expect that they're going to be profitable and generate free cash flow in 2023. Their earnings are coming out next month, and once that comes out, if they have a good earnings report, I think it's going to go up even higher. My outlook is, first, I like small companies that give me a small investor advantage. Adeia is not covered, like an Alphabet or a Microsoft or, DCB's big companies like a Tesla. So I feel like if I do my homework on an investment like this, I have an advantage against the other, gigantic investment houses. And once it's obvious that it's an investment, they pour in, and then they push up the stock price, and I see great appreciation in my investment. Beyond that, let me go over my outlook for this particular little company. They're an intellectual property leader. So they license their product and then they get paid a royalty. So that cost of doing business is really low once they have the great idea registered as a patent. They're going to have steady growth. They're going to be profitable and have free cash flow. And there's upside potential in this stock. So let me go over my scorecard for Adeia. Is this an industry I want to be a part of? Yes. I have history in the software industry. I've made a career out of working, selling technology. So I really like being in software or technology because it could be very profitable. There's no accident that some of the most valuable companies tend to be software companies, tend to be a little bit like Adeia. And this is a small little opportunity that can have a great return for me. The company is operating and performing well. As mentioned, they have just great domain expertise in this space. Their balance sheet is in great shape. Debt is less than 3 times EBITDA. You're getting a discount, or I'm getting a discount in the stock. So therefore, I continue to buy additional shares of Adeia and growing my position in this little company. Thank you for watching the video. I hope you found it interesting. Please keep in mind, I'm not recommending that you buy this stock. I like to share my experience in companies that I invest in, give you my point of view, whether I think the stock is currently at a premium or at a discount. I like to share my experiences. I've learned a ton from listening to other investors on YouTube. Good luck investing in 2023.